Bitcoin is engineered to allow you to bring monetary energy and leverage it and to be most efficient. If you have all your money in a bank account and it's in US dollars, you're losing 15, 20, 25% of your value a year. But if it's in pesos in Argentina, you're losing like 40% of your value a year. And if it's in Venezuelan bolivar, you're losing 95%, right? They're literally getting bled every week. It's like the government shows up and says,
you could be the best investor in the game. You're still going to go out. You're still going to be out.
If you're in an economy with hyperinflation, it's the same as getting bled to death. And so in an economy like Venezuela or Nigeria, Zimbabwe, or most of Africa, that's a currency collapse, which is like you're on life support on a ventilator. There is no investment strategy or business strategy that will save you, right? You're in deep trouble. If you're in America or in the Western world, then your currency was getting weaker 6, 7, 8% a year, but now it's getting weaker 15, 20, 25% a year, depending. We can debate back and forth what the inflation rate, but the reason it's hard to pin down inflation is because if you want to sleep in your parents' basement and watch Netflix and order pizza, the inflation rate's not that high. If you want to rent a house, rent an apartment on your own, the inflation rate's higher. If you want to buy a house, the inflation rate is 25%. If you want to buy other scarce assets, then the inflation rate is running sort of around the S&P 500 index. So if you want a surrogate for inflation, look at the rate at which a basket of 500 desirable stocks goes up in price. And that will tell you the rate at which the money supply is expanding. Or look at the rate at which housing, the Case-Shiller index went up 27% year over year, July to last July. It's running in that range in the last 4 months. That's the highest rate of housing price increase since 1987. So if you want to be rich, your inflation rate is the rate of the S&P 500. That's the cost of capital, right? And what the government says is, well, our CPI is going to measure things, but it won't include energy. It won't include housing. It's not going to include food.
It's not accurate.
Okay. If you don't want housing, food, and energy, then there is no inflation. But in what universe are you not going to want housing, food, and energy?
Exactly. Your money doesn't go very far. It doesn't do much.
So the first observation is, you got to understand inflation. And if inflation is the cost of capital, and the cost of capital is like the rate at which the S&P index goes up, which is about 27%, well, for us, for 100 years, S&P went up 10% a year. So for 100 years, it felt like 1/3 of what it is this last 18 months. So why did we get into this, into Bitcoin? Well, inflation is the rate you're bleeding. We have to stop the bleeding. We had a bunch of cash. We had a $500 million business growing 0% with $500 million in cash, earning 0% interest. And the value of the money is falling at 15 to 20% a year, which means shareholder value is falling, which means that, if you had all your life savings and you sat there and you lost 15 to 20% a year for a decade, everybody knows I can't just save all my money in a bank account yielding 0% interest and expect to put my kids through college or retire on that. In a decade, your money would get cut in half 2 or 3 times in value, right? So what's the strategy? You got to stop the bleeding. Now, what is stopping the bleeding economically? It means convert your currency into property that the government cannot debase. So, the Venezuelan government can print 1 million times more currency, but if you own a house, you've still got the house. They're not taking 1% of the house every week, right? So your question is, what property do you buy? Do I buy a building? Do I buy a house? Do I buy art? Do I buy gold? Do I buy commodities? Do I buy stocks? Do I buy ETFs? Do I buy crypto? Do I buy Bitcoin? What do I buy? Something. I got to buy something with my money. They tell stories about hyperinflation in Zimbabwe, and, management consultants are taking all their money and they're buying like a bicycle or buy soap or buy toilet paper. The toilet paper will hold its value more than the currency will, because at least it's still something. I had money in Argentina and the currency was collapsing. You know, it was like 1 peso to the dollar, then 3 pesos to the dollar, then 20 pesos to the dollar, then 40 pesos to the dollar. Now it's like 190 pesos to the dollar on the black market. And my lawyers and finance guys came into my office. They said, well, we got all this money. We got $1 million. They said, well, can we wire it out of the country? I said, no. I said, can we buy gold with it and carry the gold through the airport? No. I said, okay, well, can you just go buy a yacht and sail it to the Caribbean? They looked at me like I was out of my mind. But, you know, like a yacht, I mean, a boat is also property.
Yeah, of course.
Okay, so now why Bitcoin? Well, if you put your money in a boat, the maintenance cost is 10%. The boat might sink. It's expensive. If I buy a house, I got to paint it. It might burn down. You know, there's leakage, there's property tax. It's expensive. It's expensive to maintain. If I buy gold, well, gold is losing 2% of its value a year because gold miners keep producing more gold. So in 30 years, your gold's worth half as much as it was, and then another half, then another half. So gold is gradually losing its value, but it's very hard to move around, and nobody wants to rent your gold. Okay, at least if you buy a building, someone might rent it. If you buy a car, someone might want to use it. You might want to charter a boat, but you can't charter your gold. That's why people like property, like buildings and houses. Like, I'm going to Airbnb a second house and I'm going to get some rental income. That's the positive, but the negative is I can't carry a house on my back when I leave the country. And if I have an Airbnb in Buenos Aires, I mean, only a small number of tourists want to use that. So I've got a house. Who will give me a loan against it? Only an Argentine bank. Who will want to rent the house? Only an Argentine tourist. And then who will want to buy the house? Only someone that wants to live in Argentina. Okay, so that's property, but it's highly expensive to maintain. It can be impaired, it can be taxed, and I can't sell it to a Russian billionaire. So what's the best property? Gold? No, gold was property in the 19th century. A house, land, that's property in the 20th century. Crypto asset, that's property in the 21st century. Bitcoin is the apex crypto asset, the apex property of the human race. Why? It's the most secure network. It's the strongest brand. Everybody in the world knows what it is. It's engineered. It's engineered to be the most energy efficient. You know, like Brazilian Jiu-Jitsu, it's all about energy efficiency. You're in a system with someone else, and the issue is how can you bring all of your energy to bear and set it up so that they can't bring their energy to bear? And you're thinking about energy and leverage. Bitcoin is engineered to allow you to bring monetary energy and leverage it and to be most efficient. And so we bought Bitcoin because it was the dominant digital monetary network. And we swapped our cash, first 250 million into Bitcoin, and it went up. And then we did a Dutch auction where we offered to buy back the stock of our shareholders if they didn't like the idea, because maybe they wouldn't like it.
That's right.
Well, we had $60 million tendered, but we had $175 million that we had after the Dutch auction, and we bought Bitcoin with that, and it went up again. And then our stock went up. And then we issued a convertible debt, about $650 million of it. And we bought Bitcoin with that, and that went up. And then our stock went up again. And so we kept buying Bitcoin, and we bought 3.16 billion, but we issued 2.2 billion in debt at about 1.5% blended interest rate. So we used our public company. It's what I do for us. I mortgaged my company. I mortgaged the future cash flows of the company in order to buy an asset that's going up in value.